By July 2026, institutional capital is driving cryptocurrency deep into mainstream finance. After a 10-day outflow slump, Bitcoin reclaimed the $63,000 mark, pushed upward by a sudden $224 million influx of ETF investments. Curious, this chart puts that massive scale into perspective by comparing stablecoin transaction volume to legacy payment systems. In a single month, stablecoins processed $1.79 trillion. That is roughly half of the $3.5 trillion Visa processed over an entire quarter. Software ecosystems, from crypto networks to AI agents, are scaling rapidly to handle this adoption, but physical hardware is hitting a wall. Manufacturers like Apple are finding hard boundaries with their upcoming foldable devices. Technology has graduated from the research lab to the global economy, but as the underlying systems buckle under the weight of this mainstream adoption, the industry is entering 3 critical stress tests to determine if this growth is actually sustainable. The first test is physical. Apple is attempting to launch its most ambitious device yet, the foldable iPhone Ultra. This data visualization illustrates the severe production gap expected in the third quarter of 2026. Apple is projected to manufacture over 20 million standard iPhone 18 Pro units, compared to a maximum of just 1 million iPhone Ultras. The bottleneck comes down to material science. Foldable displays require ultra-thin glass and polymers to bend hundreds of thousands of times. Under continuous mechanical stress, microscopic fractures form, forcing Apple to scrap parts to maintain their strict quality standards. Supply chain analysts project this manufacturing hurdle will cause a 1 to 2 month shipping delay. That extreme scarcity is already setting up a secondary black market, where early units could fetch up to $3,000 from scalpers. Apple has nearly infinite financial resources, but no amount of money can bypass the rigid laws of physics and material science. The second stress test is architectural. Processing nearly $2 trillion in global stablecoin volume requires a much stronger foundation than the current decentralized internet. To handle it, Ethereum is executing what its creator, Vitalik Buterin, calls the Lean Roadmap. This is a massive 4-year initiative to tear down the network's architecture and rebuild it from the ground up. Ethereum is adopting stark cryptography, replacing bulky vanifications. These proofs reduce settlement times from 15 minutes to under 4 seconds, cutting fees. The roadmap also implements quantum-resistant algorithms, deflecting future quantum attacks from next-generation computers before they threaten trillions in assets. Executing this 4-year upgrade without shutting down the network requires extreme precision. It is the engineering equivalent of completely rebuilding a commercial airliner while it flies at top speed. The third stress test is security. Operating infrastructure at this massive scale inevitably breeds entirely new, automated attack vectors. Recently, attackers stole millions through an exploit called Ill Bloom. It targeted how digital crypto wallets generate recovery seed phrases. Because the random number generation was weak, an automated algorithm could guess the pattern and crack the 12-word combination. That same threat of automation is hitting the AI sector. Security researchers at the Hong Kong University of Science and Technology recently discovered a new evasion technique called Skill Cloak, designed specifically to hijack autonomous AI agents. Skill Cloak uses a method called self-extracting packing. Malicious code is wrapped inside a benign-looking software layer. When standard digital security scanners check the code, it looks entirely harmless. But the moment the AI agent executes it, the malicious payload unfolds. The evasion rate is severe. Skill Cloak bypasses over 90% of current static and machine learning security scanners. Defending against this requires the industry to adopt live, runtime monitoring, watching what the code actually does as it executes. It demands a 10 to 15% increase in computing overhead, but organizations have to accept the performance hit to stay secure. Static security is dead. As Web3 and AI tools operate autonomously, our defense systems have to evolve into active, constantly monitoring entities. The move fast and break things era of the early tech boom is over. With trillions of dollars in volume and global infrastructure on the line, the stakes are simply too high. The tech industry has entered its maturation phase. The focus has shifted entirely to repairing, reinforcing, and securing the massive systems we've already built. Whether stabilizing a physical glass hinge, quantum-proofing a global blockchain, or stopping AI Trojans mid-attack, the challenges have shifted from abstract ideas to the grueling realities of execution. Success in 2026 depends on the unglamorous, brutal engineering required to keep a trillion-dollar digital economy from buckling under its own weight.